Welcome to another special episode of Friday Drinks. We are here at the venue to celebrate the listing of the ZSE Holdings Limited, and joining us is Enimo, our regulator. So we're going to be on our best behavior. Enimo is CEO of the Securities Exchange Commission of Zimbabwe. He also used to be a senior executive at the ZSE. So maybe you can start off by telling us a little bit about the journey from the ZSE being, basically mostly owned and controlled by government to listing on the ZSE.
Thank you, Rufaro. It has been a while, but yeah, I remember back then the Zimbabwe Stock Exchange was a mutual society, and we went through the phase of demutualization, and the company I think was formulated around 2017. That's when I think it was incorporated, and its share certificates being issued. And since then, I think there's been growth and expansion within the ZSE itself. It obviously started as an exchange, as just one entity. And from 2019, I think the strategy was now around diversification, because then the market was under pressure, and I think just relying on trading alone was becoming a challenge. So we find that there were spin-offs, a training institute was launched, an invoice discounting platform, Zimbabwe Receivables Marketplace was launched. In 2020, we had VFX coming on board, being a subsidiary of the Zimbabwe Stock Exchange. And we're now seeing ZSE Holdings, which incorporates all these things. So it has been a good journey, and we are glad to be part of it, and we are supportive of what has happened today.
Okay, fantastic. And in terms of the regulatory framework, we've seen quite a lot of action in that space, changes in the regulations. Yeah. I think one of the things that market participants agree on is that the Securities Exchange Commission is quite progressive. People with ideas generally come through to see you guys, and you're quite accommodating. And the turnaround in terms of an idea ending up in a statutory instrument or being incorporated in the rules has been quite, impressive. What if you imagine what the next 6, 18, 36 months looks like from a regulatory perspective? Do you have any interesting developments in the pipeline for the capital markets to look forward to?
Definitely, and thank you for that compliment. I think I just wanted to comment that our mindset from the Commission's perspective, we are quite aware of the environment that we operate in, and our industry, unlike other financial services where there's somewhat of an obligation for you to have a bank account, an obligation for you to insure your vehicle. With investments, it's more discretionary. So you operate in that environment with that awareness that the framework can't be as restrictive, it can't be as demanding as for the other sectors, because you are operating in a discretionary way. It's a choice for people to then part with their funds and support you. So your framework is to be accommodative as much as possible. But going forward, I think we've got a pending statutory instrument which we had shared with the market in terms of our interest in registering holding companies. And this is being enshrined in terms of international principles of regulation, where you have got a holding company that holds licensees. It has been found to be prudent that you don't just focus on the licensees, but also then extend your supervisory oversight to the parent as well, in terms of principles of good regulation. So we've got a statutory instrument that is pending that will focus on us registering holding companies within our space. But we are aware that there are holding companies that are already being looked at by other regulators. For example, insurance holding companies that might have subsidiaries that we license. Those ones will be excluding from this registration process, just to make it easier. We feel comfortable in that if an entity is already being supervised by another competent regulator, there's no need for regulatory overreach. Same thing with bank holdings. We will not be stepping into that fort as well. So in this case, we'll just focus on those that might be excluded by the other regulators. And the principle being just to ensure that the governance is not just at the subsidiary level, but that is also enshrined at the holding level. So that's pending one. It has already been drafted. It has been shared with the market for comments, and currently it's with our parent ministry, which is reviewing it. So that's closer. But in a more medium to long term, we are also in the process of amending our Principal Act, the Securities and Exchange Act, Chapter 24-25. And again, it's an act that has been existent since 2008. It has been amended once in 2013, and it's now almost 12 years since the last amendment. Obviously, the financial markets have evolved. There are new ways of doing business. There are new entities that have come across. There are new products that are available. And some of the aspects were not accommodated in the original act or the current act. And so we want to provide for those developments. And more importantly as well, you find that in terms of the current act, the greatest restriction that we've felt in terms of us exercising our authority as a commission is that it provides for what we call criminal penalties, which for financial crime don't work very well. So we want to change that framework to a civil penalty framework, which is more...
So Ranga will be less likely to end up in jail?
It depends with the nature of the offense. But at least we are saying at the first instance, the commission should have an upper hand in terms of determining what needs to be done with an offending licensee before we escalate into the criminal side of things. Okay. But it's not guaranteed that you want to end up on the other side.
It's actually very interesting. Anyway, I'll never find myself in jail. So look, it's really, I'm excited about those changes, and because that was actually my dissertation for my law degree.
Interesting.
Around how secure, how robust is the Securities Act in terms of dealing with issues around insider trading and things like that. And the issue of penalties was actually one of my findings in terms of, okay, do you want to make it criminal or whatever? So look, I'll be happy to interact with you guys and probably share some of my findings. So my question or maybe issue that would want you to just articulate on anymore is around whether, so you have got so many stakeholders.
Yes.
Yeah. So I would like you to just unpack whether you think the capital markets are well understood by all your stakeholders. And I think one key stakeholder would be policymakers, government, your fellow government officials. Because of this, in the past we have seen the sentiments where the stock market is actually not linked with any good. It's actually attached with negative things like parallel market activities, driving the rate, and the key issue. And we up to a point where some of the listings had to be suspended because they were not seen in that light. Do you think your stakeholders, like your key stakeholders, understand the market as much as you do, and what is the Commission doing to try and dispel any kind of negative connotations that might be attached to capital market activities?
No, thank you for that tough one, Ranga. So, in terms of understanding, so if you look at it, before the Commission was actually, before it came on board, it only came on board around 2008. Prior then, there was a department within the ministry that actually looked at capital markets. So, from the ministry perspective, and we were talking about the Ministry of Finance, there is great understanding of the markets, great appreciation of the markets. In fact, the current minister is well, vested in capital markets. He's knowledgeable about private equity. At one point, he had his own firm listed on the stock exchange. The current permanent secretary was a former CEO of a listed entity. And at director level, we have got people with good experience and understanding of the markets. So I would say there is understanding within our ministry, significant understanding. Where is perhaps the gap? There is, how do I put this? Need, I think, for us to, I think for a long time, the capital markets, and this is perception which might be also be linked with reality, used to be viewed as a club and a preserve of a very few people. Now, in terms of political importance, this is where I feel that we were missing. So economically, very important, but perhaps politically we were not there because we represented a very preserve club, which would probably not matter if it's affected. So we have to demonstrate our inclusivity. We have to demonstrate our importance, not only economically, but also politically. For me, I think that was the missing link, in that for a long time we ran with this entity and did not assimilate into structures, I think, that mattered. For me, that's where we need to correct. But fundamentally as well, we find that it also goes back to this issue that I opened with, to say, is investment a must? It's a discretion. And when something is given to choice, its importance is also less reflected. It's different from insurance, where saying I want to cover a risk, and if I don't cover this, this is the magnitude of the loss that I'll suffer. So we also need to build awareness around that concept, to say, even though it's a discretionary part of the financial ecosystem, what role and what significance does it play towards perhaps even those entities that might be, mandatory? What role does the does the investment space play for the insurance sector, for the pension sector, for the banking sector, for the vulnerable groups? Because government, by nature, also wants to look out for the vulnerable. What role does it play for, for the common person? I think that's what we need to build and drive momentum on.
Yeah, it's interesting. So I almost interjected. Then I thought, it's my regulator. I might lose my license.
It's not a problem, because that
one. On the issue of whether investment is really discretionary, when you consider that as a country we have got saving and pension institutions such as NASA.
Yes.
So and the capital markets actually provide a platform where, the likes of these pension organizations can invest their funds for the future. And it becomes a very basic issue that, is affecting even the very first level of an employed person.
Yes.
So if you look at it from that point of view, it just tells you how important it is. So that's why I started off with my question of whether the stakeholders really understand the importance of this thing, especially given where we are coming from in 2008, where value was lost, and even the inquiries that then took place after that. One gets a sense that maybe there's a lot of work that needs to be done, in as much as the Commission is doing so much in terms of investor education at the people that, grassroots level. I think there's also a lot of work that you and your team need to do, interacting with your key stakeholders in policy making, for them to understand the link that the capital markets have to even economic activity, because some of the projects that government is doing, they are better funded by private sector capital. Even the roads, like why government can chip in with money, but probably the pension funds could also, if a bond is issued and it's listed on the Zimbabwe Stock Exchange or Victoria Falls Exchange, it can be used as part of funding the construction of the Harare-Chirundu Highway and all these infrastructure projects, whether it's the Gwai-Shangan pipeline and all these things. So they actually even go to the core of the politics, making sure that the people service delivery is done and the capital is raised internally. And when that happens, there's economic activity. It's good for the politician, at the end of the day. So
I'll actually double click on what he's saying. So if if you actually think about the government of Zimbabwe and our sovereign debt,
yes,
we're talking $25 billion. The capital markets could actually play a key role in raising money for the government, trading government debt instruments. We know that treasury bills in our country are very heavily discounted. There isn't a lot of, and there's a lot of opacity as well around the treasury bills. What is the correct discount? What is a reasonable interest rate? But if you had, I think the last time I checked, there were 22 licensed stockbrokers. Yes. If you had these 22 firms out there in the market, selling government paper, trying to raise money for government, interacting with global capital markets, we could actually play a critical role in terms of dealing with some of those issues. But and to double click on what Ranga is saying, I don't get the sense that the policymaker has an appreciation of the potential of our capital markets to be a significant partner in government, whether it's in infrastructure or in raising debt or in these other areas.
Okay, so it goes back to what I said, that so if you look, one institution that perhaps we have not interacted with quite as well as we should is Parliament. This is where national budget is presented and discussed. How many of the parliamentarians do you think understand the capital market? Perhaps to influence the discourse in that house. This is why I said, as capital markets, I think we have played more on the economic side, and we have not integrated well with the political side of the country. And this is where sometimes we need to go to for the decisions that you are talking about to be supported. So, and these are the people that represent, the common person on the ground. But if that person has got limited appreciation of what a capital market is, let alone a bond, we will spend the discussions amongst ourselves. In fact, I want to link this with what Ranga said initially about his research. I actually came across one research that was done by a student at the University of Zimbabwe. It's a 2015 it's a dissertation which I picked online. And it was looking at what are the impediments to participation on the market. And one of their findings, they wanted to check if the level of education has got a bearing. And lo and behold, what does it say? This is just a research. They found that it doesn't matter whether you hold a degree, sometimes it doesn't even mean that you have got the financial literacy. So I feel that's where we also disconnected ourselves from the institutions that matter, which is your training institutions, your academic institutions that shape the mindset of a person as they grow up. We did not calculate, savings, investing into curriculum at an early stage or even at a later stage. You go to university, even if you are doing a degree in law, I think there should be some appreciation of how to handle finances. But there's definitely some disconnect. There's a certain level that understands, and there's a certain section I think that has got limited understanding, and we need to bridge that gap. But it goes beyond that. We also need to demonstrate practically as a market, because we claim to be able to do so. I'm not sure if there's anyone who has actually pitched a proposal to whoever makes these decisions to say, can you give us this piece of road for trial? Allow us to raise funds on it, resuscitate it, and allow us to collect. I'm not sure if there's anyone that is actually taking that proposal.
Okay.
To those that matter.
Okay.
Well, to demonstrate, because it's easy to talk and say we can, But those that have done whatever has been done now have demonstrated that they can do what they needs to be done with whatever means that is being availed now. As a market, let's find a project that we can say we can raise funds for, find a way to recover those funds, and pitch it to the policymakers and see how it goes.
Yeah,
I think that's a fair challenge.
Yeah, that's a fair challenge, yeah. And a very important issue which is around engagement, and it's interesting that I'm picking that maybe within a period of less than 2 weeks, where I was at some event where someone was actually challenging investment professionals that I think we need to engage more with the policymakers, with the politicians, to understand what their needs are, the kind of needs that we can sort of meet or fulfill using our expertise. So I totally agree with Anymore there that we when we see those opportunities, maybe we need to do more in terms of, like a typical investment banker thing, where you go and make a pitch and, just tell them that, what, you are doing this thing, traveling 80 kilometers. Do you know I can make your life easier? And you could be doing easily 20 kilometers, save on the 60 Ks and whatever. So is that the, so what's the expectation? Is that the only expectation that maybe the commission has of the market players? What else do you think as market players, Rufara and I as stockbrokers, what do we need to do to support the effort that you are doing? Because I get a sense that, we've got these expectations on you.
That's correct.
But probably when you are in there, maybe you get some very uncomfortable questions that, what, you keep coming here with these requests. We've never seen the people.
Yes.
What are some of these?
So number one, and I've appreciated this in my small stint in government. At any level, there are challenges. Whether you are a CEO of a parastatal, CEO of a ministry, which is the permanent secretary or the minister, you're always inundated with challenges. But what you find missing most of the time are the solutions and people that bring solutions. Most of the time you meet people that are bringing more challenges to you. And that is good on its way in terms of how you then look at things. I think if we could have more solution-oriented presentations, to say we think you are struggling with this aspect, and we think this is how we think it can be solved. I think if we do more of those, chances are out of the 10, one might be picked. So for me, that will be a very genuine expectation. Let's be solution-oriented. So we complain about currency, but what is the solution? We complain about inflation and perhaps our fixed income not working. I mean, look at other countries in Africa that have got active bond markets. The inflation is not two-way perhaps from us, but they've got active markets. What are the practical solutions that we can offer to some of the policymakers? I think that's number one. The second one is then this effort in terms of investor education. It's quite critical, and this one requires collaboration amongst the parties. So when I go as a commission, I probably do it generic, but they will remain with knowledge. But if you want to activate participation, you now need someone that actually says, so you've heard about shares and this is how the markets work. When you now want to buy, I'm here. For you to open an account. If you approach me, these are the things that I will need from you. And my office is at this. You then have got the practical side of the educational aspect. And that has been missing in terms of the investor education, because more or less you find it's the commission, but it's top level, because we can then pinpoint someone to say, go and see Ranga, because there's 22 of you.
Of course.
So let's collaborate. Then policy making as well. I've seen that sometimes we get tired of suggesting, and perhaps the proposals are not met. I think we need to continuously engage. So this is probably being more consistent on the things that we believe, irrespective of how perhaps we've been received at the first instance. I'll tell you, for example, it's the first time we pitched that idea, we were thrown out. completely. We do not even get an audience.
It's a crazy idea.
It's a crazy idea. You guys want to rob us of taxes. You were saying it will help here. On what? We were thrown out completely, but we said, went back, re-strategized, and said, okay, so how do we pitch this and convince that there's some solution in it for government? And this is how we then said, okay, government is concerned about its current taxes. What if we pitch it initially to say, we just focus on you, or those that you are currently not collecting taxes on? So this, if you see the legislation now, it says pension funds you're allowed, because we then demonstrated to say, yeah, we know you're worried about taxes, but these entities, you are not collecting already. So there's no loss here. And for those that you are worried about, which are corporates, we then say for new projects, which you were not collecting. And then it was, so it started making sense. So there's no actual loss here. It will be on you, we're not collecting, so it's fine. And for pension funds, they've been exempt. So I'm saying, I think the other areas that we might have lobbied, we might have made proposals, and we were not successful at the first instance. I think let's continue engaging. Let's not tire of. It's the same thing with the vesting period. This thing came on board in 2022. We only got a solution in 2024. But if we had given up, we could be having vesting period by now. So sometimes, and government is like a big ship; it turns, but slowly. So I would say the third and final thing for me is, let's not tire to make proposals. And let's continue, especially if we have firm belief that it's a solution that can work. Let's continue lobbying and let's continue engaging.
So one other thing that we are seeing is the economy is increasingly becoming very informal.
That's correct.
Yeah, and when you look at the profile of the businesses that are there, they are mostly SME type.
Yes.
And because of, I think one reason that we hear that is really even forcing some big formal businesses to go almost informal is the issues around the cost of regulation.
That's correct.
So as the regulator on the capital markets, what are you guys doing to ensure that the cost of even listing, the cost of these people creating products, bringing them to the market is manageable, and how flexible are you in terms of being able to sometimes things can become very tough. What's the Commission's attitude regarding situations where maybe an applicant or a licensee is looking for that flexibility? And do you think when you compare with the other markets, the cost of regulation is higher or lower? What can be done to improve it?
Okay, it's a fair assessment, and I would like to say, I think the current push within government is for SOEs to be viable. I think for a long time we've drawn on public resources and perhaps abused the funds, so that is the perception. So I would want to explain to say there's now a real trust, from central government that SOEs should draw less and less from the national purse and should be able to stand on their own and therefore meet their own obligations without always resorting to the national purse. So from that perspective, we find that most regulators are more or less looking at how they can generate their own revenue for self-sustenance, but obviously in a sustainable manner. And this is probably where some of the aspects of a higher operating regulatory cost is coming from. But we do it reasonably because we are also then answerable to the public. But I just wanted to explain that some of the regulatory costs,
there's that pressure
to draw less and less, or to rely less and less
on the fiscus and to be generating your own
and be self-sufficient. So there's that pressure, but it's done in a way that is managed, because whatever you propose at SOE level has got levels of scrutiny and justifications. That's why, for example, the Commission, when we ever want to pass any law that includes paying we have to pass it to the market for comments, and most of the times they will be saying no, and perhaps the percentages that would have proposed. If you look at it carefully, I'll give you an example. For example, when we increased the fees last year around April, it was an average of about 50 or so percent increment that we proposed. And when it went to our authorities, I mean our ministry, they actually slashed that to a maximum of 17%.
Okay.
So that's how they intervene. So there's those checks and balances. Then coming on to sustainability, I think some of the pressure is coming because the market is small. And we are relatively a small market, and then we've got a number of players that are many, which also means then the cake by each person is also very small. So it becomes, even if it's $1, if your earnings are $1 and the regulator is saying pay me $1, $1 is a unitary measure, might be small, but when you then put it across your revenue, which is $1, it becomes 100%. You say the regulator is taking everything.
Of course, he'll be taking everything.
But so the thrust should be, let's grow the cake.
Okay.
Let's grow the cake. Then the $1 over 10 becomes 10%. It's no longer as big as it was before. So for me, I've always looked at it to say our problem is not necessarily the regulatory cost. It's because our cake has not grown. And these are the numbers that I was sharing earlier. If you look at our market cap, 3.8 billion 2009, 3.8 billion 2025. 15 years down the line, it's the same cake. Number of entities, however, have doubled, and obviously the share per person is smaller. So what we need is to grow the cake, so that the regulatory burden becomes less and less. I would say that for me, that's how I see it.
Okay.
That's how. Then in terms of what are we doing, we earlier on, I think we tried to constitute a committee to comprehensively look at the operating costs within our market. I think at that stage it was more of a reactionary move, but now we actually want to do it very consciously. We are going to be looking at all the costs in the market, and we'll be working with all the SMIs to see how we can move around the numbers and see where we can reduce and where we can nibble a bit. We've already engaged the stock exchange in terms of the listing fees, and there's an ongoing conversation around that with the exchanges. But we want to do it comprehensive across the market, including even our model. Should we, this will affect some of the brokers, should we continue with a fixed brokerage model, or should we move to a flexible model where you negotiate with your client subject to certain limits? So those are all some of the things that we are considering within the commission, but we'll be working with the SMIs in terms of the comprehensive way forward.
So one of the solutions in my mind, in terms of actually bringing on board many more companies to the exchanges, is incentives. Whether it's a tax incentive, you pay lower rates, or and various other incentives that are within Treasury's power to make the market much more attractive to companies. There hasn't, from where I'm sitting and from what I can see, there hasn't been a significant drive to create such incentives for a lot of the companies to seriously consider listing on the local exchange. Do you, and perhaps we as capital market players should bear some of the blame for that, because we are not driving such we're not lobbying for such incentives. But from where you're sitting, I think one of the low hanging fruits in terms of increasing the size of the pie is to create incentives for these companies to come that are already in the formal sector to come on board onto the exchanges.
Yeah, and it's something that is commonly said. So when you talk incentives, mostly we then think of taxes, tax cuts, and so forth. But if you go on markets that have done this, so if look at Kenya, for example. Kenya introduced these incentives, tax cuts, for all types of securities rates, capital gains exemption, stamp duty exemption. They still have got one listing. And they went into this market, I think, around 2012. All the exemptions there. It
didn't move the needle.
It didn't move the needle. There seems to be no direct link with just tax cuts and listings taking place. I think it takes more than that. I think the common principle of business is value proposition. If I come to you and I want your money, I have to demonstrate value. I believe it's the same thing with our markets. Besides the tax things, what value can we demonstrate to an issuer that we bring to them if they come on board? That surpasses perhaps their current status. And for me, I think that's where we have been struggling. To say, if I go to Zimplatz for now, and I say, come and list on the ZSE, what value is Zimplatz going to get out of that listing? And this, I've been looking at even the sustainability of capital markets going forward, to say, do we have a value proposition as markets? And I think that's what we need to work on. And that is then complemented with perhaps a tax break here and there. But the core market should have a value that we go out there to say, if you come on the market, this is the core benefit that perhaps helps you with your challenges A, B, C, D. And I think for me, that's where we have been struggling as a capital market. Let's have a value proposition, then we can go to government for complementary incentives. Because government also does studies. I was surprised when we were pushing for capital gains withholding tax. Believe me, there are people that are on a daily basis studying tax within government. And when you go there with no sufficient firepower, you will be convinced otherwise. To say we actually have got more tax friendly environment than other jurisdictions. So taxes have not really demonstrated, especially in African continents, that they can drive listings. It's up to us to find what can drive listings and then convince people. Taxes can be an additional benefit as part of the package. So if you look at the VFX, for the first 2-3 years, or the first 2 years, it allowed people 100% export retention. But we spent almost a year with CDCO only on that platform until Bindura came on board and then one other minor.
Maybe they doubted.
But I can tell you one incentive.
Perhaps it was short-lived, but in our minds when we pushed for it, because I was still on the other side, we thought there was going to be a floodgate. It didn't happen. And but I think I would say perhaps let's have more research on that aspect, whether just tax breaks can actually drive listings. The one market that I've studied was Kenya, and I was there. They've now lost those incentives as a result.
Well, I can tell you an incentive that will definitely move the needle, and it's not going to reduce government tax revenue. And one of the reasons why you don't see a lot of capital coming into Zimbabwe in the first instance is because of exchange controls. Okay. There's just this consternation, and the question always arises. If I wire $1 million into this jurisdiction, can you guarantee that I'll be able to wire it out, if I double it on your markets? And, what are the, and unfortunately, we've got a long track record of breaking promises in this regard. And that's a major concern of foreign capital when it comes to the listed, when it comes to the stock markets. And if we actually made it a rule that, look, as long as you're coming to deploy capital on the local basis, you are exempt from exchange control. I think that would be a game changer in terms of people applying their minds to deploying capital on our local exchanges. And I think it's no skin off the government's nose, because right now that capital isn't coming to Zim.
That's correct.
Right.
That's
so I don't see downside risk of running such an experiment where you say, if you want to come and play in our capital markets, you're not subject to exchange control.
Okay. So I want to give you a challenge. I want you to start foreign participation on VFX. VFX is exempt from exchange control currently from 2020. I want you to go and study how much foreign participation has been there. This is why I say some of the things we then fail to convince policymakers. because we don't then have, credible evidence. So VFX has been exempt from exchange control since 2020. Foreign participation has not been that great.
But it's a trust issue anymore, to be honest.
So that's the problem.
So these are the same people that lost money on the ZSE.
It's no longer what? It's no longer what?
Yeah.
An exchange control issue.
Yes.
So it's something else. And that becomes the problem to say, how then do we address that?
Yes.
What do we need to address the trust problem?
So I guess the key takeaway from that submission you are making is so it's not just one issue.
It's
that
not
needs
just one
to be
issue.
addressed.
Yes.
So we need to ensure that all the issues, all factors that are really an investor would look at before they get
That's
into a
correct.
market
That's
are sorted. Because that statistic actually.
It has gone down very
it's a very disturbing one, because even at the height of hyperinflation in 2008, foreign participation was around 35-40, and it was because what Rufaro is talking about, that even at the height of hyperinflation there was a mechanism for someone to be able to move their money out of the country, and surprise, that mechanism was Old Mutual. It was one of them. Okay. So it could be a story for another day. I actually think it's one issue that us as market players have not really done a good job of. I wouldn't expect anymore to make that case, given how emotive that Old Mutual issue can be. But Old Mutual was actually a big relief to the foreign current management system of this country, because it was used to bring money and to take money out without necessarily resorting to the parallel market. Yeah, so it was working very well. I mean, us in the broking community, we actually would experience that, where someone buys the shares in London, they bring them here, we trade them in Zimbabwe, they use that money to deploy into a business or to invest on the market, and when they think of taking the money back, instead of going onto the parallel market, they'll just take the share, even if the money had been deployed into an Econet Delta, you sell the Econet Delta, buy your Old Mutual, take them out. So I guess to a certain extent, us as market players, we also have not been very articulate on some of the issues that where we think maybe you need to complement what Enimo and team are doing. So there's a lot of work we need to do. But the way I look at it is, before we even go out there, I remember Faro, when we would go out in different countries trying to raise money for Zim, and would actually raise money. It was because we were quite confident of the markets, and we were also they were demonstrable returns profiles. So I would say, before we go out there, start trying to convince some of these guys that got bent, at least the returns have to be attractive and make sense for us, for the local investor first. That's before you go out. So it's a lot of work.
I agree with you, Ranga. I think Old Mutual is a conversation for another day.
I didn't want to give that to you as a question. Yes. I just wanted to make a comment.
That's fine.
Anyway, the producer is jumping up and down. Anymore. Thank you so much for doing this. We could go on for another 30 minutes or an hour. I think there's quite a few issues that we ought to get into the weeds of. I'll take this opportunity to extend an invitation to you, to our studio, for to get into the weeds of a lot of the issues that we've discussed. And I hope our audience appreciated your contributions. Thank you so much for doing this, and shout out to our sponsor for this episode, Remax Realtor. Have a great weekend. Cheers.
Cheers.